Okay, welcome everyone. Hi traders. And I'm very happy to welcome you at our second session of our webinar marathon. And thank you everyone who joined us last time already, and a special welcome to every single one of you who is perhaps here for the first time today. In our previous session, a quick reminder, we talked about the price mechanics. So essentially how the price is formed through the interaction between buy limits and market orders, or sell limits and market orders, and how you can observe this process using tools like, for example, smart tape, the depth of market, and the footprint chart. So today we are going one step further. So diving into one of the most powerful topics in the order flow trading, which is a footprint chart. So we're going to explore asks and bids, the interactions between the order flow, and how their behavior can reveal the footprints of large players in the market. So here what we are going to be covering today. We are going to be There we go. So we are going to be talking about the bid and ask mean in the context of footprint and how do they work and function. We are going to access the market participants' aggressions through bid and ask activity. We are going to talk about what delta is and how can it show a pressure from buyers and sellers, and how all of this looks into the Atlas platform using the footprint charts, delta, and cluster analysis tools. Good afternoon, everyone. Christoph is here. Aldoro is here. Welcome, everyone. I can see you. And I'm very happy to see every single one of you. And most importantly of today's whole session, this won't be just a theory, because in the end, I'll show you live real examples so you can see exactly how to read the interactions of large players right on the charts. And if you are new to the volume analysis or the footprint analysis, this will be extremely valuable. I truly wish that I would learn it in the beginning of my journey and not the years into the trading already. And if you are already trading, so you've been experienced trader so far, this will still give you a new tools to filter trades, understand market context better, and know how to enter or stay out of the market, for example. So, and as always, we'll finish our session with a Q&A and a small live walkthrough. So if you're ready, let's jump straight in. So in the previous webinar, we talked about terms like, for example, ask and bid, and how the price is formed and how the market auction works. If you didn't watch it for the registered users, you will be able to access the previous recording already through your email. We also discussed the fact that there are two types of orders in the market. There are passive orders and there are aggressive order flow. So let's quickly revisit that before we move on. Passive market participants are traders who place their trades using limit orders. In simple terms, they submit buy or sell orders at the specific price and then wait for the market to reach that level. So they don't chase the price, they essentially patiently wait for their orders to be filled. And that is why they're called passive orders. So the passive trader also comes from this, meaning someone who just waits without taking the immediate action. And any market participant can act as a passive trader, so you don't need necessarily to be a big trader. It doesn't really matter if you're a bank, if it's a pension fund, a hedge fund, or individual trader, like, for example, you or me. The only requirement to be a passive trader is to trade using limit orders, so essentially buy limits or sell limits. So if you are placing a limit order in your trading platform, you're going to be participating as a passive trader. And then when market reaches your requested price, the order is executed and opened without your interaction. Now, here is something important to understand, as we already talked about on our previous first webinar of the series, is that passive sellers, those who place limit sell orders, they rely on aggressive buyers to come in and fill those orders. In other words, sell limit order is matched with buy market order to be filled. Similarly, passive buyers placing limit buy orders, they're going to depend on aggressive sellers for their order to be filled. So the buy limit order is matched with the sell by market order. On the other hand, aggressive market participants are traders who enter using market orders, as you probably already guessed or learned on our previous session. So when you click buy by market or sell by market, you automatically become an aggressive side of the trade. So your position is going to be filled immediately, regardless of the current price. All right. So aggressive participants want to get into the market right now, even if it means sometimes taking a slippage. That's when your trade is filled at the worst price than you expected initially. So again, here's how it works. A market buy is filled against the first available sell limit order. The market sell order is filled against the first available buy limit order. And here is the second takeaway I want you to make notes on. Limit orders act like barriers, so they slow down the price. Market orders break through those barriers and they move the price. Now, as we revisited that from the previous session, let's now look at the basis of cluster analysis. On the left side of your screen, you can see a regular Japanese candlestick. So this is how the candle looks. It has the open price, the close price, the high and the low prices. Now on the right side, you see a simplified version of a footprint chart representing that same candle. This shows you also the open, the close, the high and the low, but inside of a footprint chart. And most importantly, it reveals what happened inside of the candle itself. The buying and selling pressure at each and every single price level, so at each and every single tick, the volume traded, and how aggressively traders interacted. So this is a basis of how the footprint looks. Good day, everyone who joined us a little bit later. I see Alexander and Hamo in the chat. Welcome, everyone. Now, let's have a look at how trades are displayed inside of the footprint candle. On the right side of the footprint, you see trades executed by ask, meaning aggressive sellers hitting passive buyers. On the left-hand side, you see trades executed by, on the right side, you can see ask, so aggressive buyers hitting passive sellers. On the left side, you can see bid, meaning aggressive sellers hitting passive buyers, okay? So one of the biggest advantages of order flow analysis is that it shows already executed trades, not just pending limit orders like, for example, depths of market that might never be filled. I really love footprint chart because it shows you what just happened. And this is the least lagging tool that I found in the market. Of course, we can go to the level 2 data and so on, but footprint chart shows you exactly what is happening at this very moment and allows you as a trader to react to it appropriately. So as a footprint chart organizes this all data, asks and bids in a way that's much easier to read, analyze, and also even backtest compared to the traditional candlesticks. Okay, so with this foundation in place, we can now dive into one of the most useful metrics in order flow analysis, delta. So we're going to talk about what is delta in trading, how useful it is, and how to analyze it, and how can it make our lives as traders a little bit easier. Delta is essentially the fourth letter of the Greek alphabet, and you can see the sign on the top of the screen. And in mathematics, it usually represents a difference in change in a certain value. Now, in trading, delta refers to the difference between aggressive market buyers and aggressive market sellers. So the formula is very simple. Delta equals ask minus bid. This means that delta shows us how much more or less buying occurred at the ask of price compared to the selling of the bid, within obviously the given candle, bar, or the footprint cluster. So the delta, in other words, is telling us how many more or fewer market buys there were compared to market sells within the specific candle, 1 minute interval, footprint cluster, or range XV chart, depending on the type of chart that you are using. And now you might be wondering, if you've heard delta for the first time, now you can be asking how the difference between asks and bids is even possible, because in every trade, there are both buyers and sellers. And there needs to be equal amount of buyer and seller to be able to fill in the order. Well, that's a great question. And yeah, it's true. Every single trade on the exchange happened between two sides, a buyer and a seller. But what really matters for us, if we are talking about delta, is who initiated the trade. So who was active party and who was just a passive waiting side. And that's where the key difference lies. So here we come back to the two main type of orders, as we talked in the beginning of our session. A market order is an active and aggressive market side. A limit order is passively resting. So according to the basic principles of order execution, which we already discussed in the previous webinar, when a market buy order is placed, it gets filled against the resting sell limit order. So a market buy order plus a limit sell order is an ask type of order. Why? Because the ask side, the buy side, was more aggressive. Now, on the other hand, a market sell order plus their buy limit order is a bid order. Why? Because the bid side was more aggressive. And delta shows you the difference between these two types of orders. So if this wasn't clear enough, let's break it down with a very simple example. Now imagine that you want to buy a stock right now at this very moment, okay? And you send a buy by market order and it immediately gets filled against the sell limit order. So in this case, you are an aggressive buyer on the ask side and the seller is passive. They just placed the limit order and waited. Okay, so this is going to be recorded as the ask type of order. Now let's flip it to the other side. Imagine that you want to sell your position right now, so you send a sell by market order and it gets matched with a buy limit order accordingly. So in this case, you're going to be the active aggressive seller on the bid side because the buyer was just passively waiting. And this will be recorded as the bid type of order. So essentially we can say that delta is calculated like this. The volume of aggressive buy by market orders, ask, minus, this should be minus in the center, so be aware, okay? So it will be minus the volume of aggressive market sells, which is a bid. So in short, delta equals ask how much volume in contracts was bought aggressively minus market bids. So how much volume was sold aggressively in a calculation of contracts. And this is going to tell us whether buyers or sellers were more aggressive during a specific period, a bar, a minute, or potentially a cluster. So now that we understand already what bid and ask orders are and how delta is calculated, let's look at how they're displayed inside of every single footprint chart. On the left side, you're going to see bid type orders. These are aggressive sells. On the right side, you are going to see ask type of orders. So those are aggressive buys. So here how it works. Bid shows aggressive sellers hitting the bids and passive buyers waiting with limit buy orders, which we already executed. Ask shows aggressive buyers lifting the offers and passive sellers waiting with limit sell orders. Orders are executed at either bid or ask side, and when buyer places a market order to go long, their trade is printed on the ask side. When a seller places a market order to go short, it is printed on the bid side. And now, hopefully this is going to be more clear when you understand the bid type of orders and ask type of orders, but your question still might be, well, how can I even tell a number that appeared, it belongs to the ask side or bid side, and did it go from the passive buyer, passive seller, aggressive buyer, or aggressive seller? Well, honestly, you might not like the answer, but because there is no 100% way of knowing it. But here is the good news. Throughout this webinar today, I'll teach you how to make logical conclusions and high probability assumptions, which, if you get it right, are going to help you to find better entries and specific exits when the market starts going in the opposite direction. So you will be able to learn how to interpret the signals on the asks on the bid side for the context and structure to make better trading decisions. Let's move on. So since you already know how the ask and bid functions and what delta is, and the delta is the difference between ask and bid side, now let's look at the difference between bid and ask footprint and the delta footprint. On the left side, you can see the bid and ask footprint. In each cluster, you will be able to see both bid and asks. Now, on the delta footprint chart in each cluster, instead of seeing a separate breakdown of bid and ask volumes, you will be immediately seeing the difference between them. So essentially the number of delta. And here is the same example of the candle. You can see on the top row, we had 0 bids and 13 asks. The delta is ask minus bid. So the delta in this case is going to equal 13, which we see on the right side of the screen. The delta is green and it shows the number 13 inside of the top cluster, which is the number of delta. Let's move on one row lower. We see the bid 0 and the ask 21. Delta is ask minus bid, which equals 21. So the second row on the delta footprint chart is also shows as the number 21, and the cluster is also green, which shows there are more asks than bids in this specific cluster at this specific time. Let's move on the third from the top. We had 1 bid and 34 asks. Delta is ask minus bid. I hope you remember it by now. So we have 34 minus 1, delta is going to equal 33. So on the right side, on the delta footprint, you see the number 33, and delta becomes even brighter because we have even more asks than bids than in the previous two clusters. Now, I hope this is clear. Please let me know in the chat if this was clear for you and you are following. But nonetheless, if you will have any questions, remember that in the end of our today's session, I will leave time for the Q&A, so you can ask any questions you have, and I can help you in the best possible way. So you've probably noticed by now that delta in the footprint chart displays in a green, like I just explained, or red cells, and with varying intensity. Okay, somewhere it's lighter, somewhere it's darker. I can see your comments in the chat. Alexander, Severals, Fabian, thank you so much. Salvador, fantastic. Thank you for the feedback. Nonetheless, if you have any questions, I'm here for you. So the cell turns green, as you already guessed, probably when the number of asks is greater than the number of bids. A cell, on the other hand, turns red when the number of bids is greater than the number of asks. Simply put, it reflects the balance of power between buyers and sellers who bought or sold aggressively within this cluster. So it seems logical to assume, right, that if a positive delta appears, that means there were more aggressive buyers than sellers, and this could indicate strong demand and potential upwards momentum. Like, for example, in this screenshot, you can see on the right side the green delta clusters appearing in the footprint, and the price start going up. The brighter the green cells, the stronger the price pushed up, as you can see. A negative delta means sellers were more aggressive, showing pressure on the downside. And you can see on the left side, we had negative deltas, red bright clusters, and the price was slowing down. However, it's not always that simple. Sometimes you will spot anomalies, And situations like, for example, when the delta is positive, meaning there were more market buys, but the price is falling. You will also see the situations when delta is sharply negative, and you can see the red bright cells, but the price is still rising. What does it tell us? Well, it could mean that buyers have been trapped, for example, or that the large seller is sitting with a limit order, absorbing the buyer pressure, creating an illusion of the buyer's strength. These are exactly the kinds of moments we'll learn to recognize using the cluster analysis and footprint charts. So hang on to find more, okay? So again, it's not always that simple. However, this is a basic understanding on how we are going to look at the positive or negative deltas. If the delta is positive and the price is rising, this is going to be confirming the strength of an uptrend. If the delta is negative and the price is falling, this is going to be a confirmation of the strength of sellers and the continuation on a downward trend. Both the situations can be used to enter for the trend continuation. So if the price is rising and you see the positive bright delta clusters appearing, those levels can be used as entry points for the trend continuation, both if you are a scalper or an intraday trader. Also, on the flip side, if you will see the negative bright delta and the price falling, you will be able to use those levels of negative delta in clusters to enter for the short trade continuation. Both, again, if you are scalping for the small movements and also if you are looking for the intraday setups. But let's go through a few more scenarios to better understand how delta behaves in different kind of situations. Again, the situation number one and the scenario number one is positive delta with rising price. A very simple example happens a lot in the market. You will be able to spot it lots. This confirms strong buyer pressure and may suggest the move is likely to continue upwards. Buyers are in control and the price is reacting accordingly, so it's going up. I am going to move my camera for a second. Okay, this is not, there we go. I'm gonna move my camera so you can actually see what I marked up on the screenshot. As you can see, the price was going up, the first candle, and in the first candle, we see several levels of green bright clusters appearing. Next candle, another green cluster. The third candle from the left side, we see it pulling back to the levels of bright gray, green positive delta. Those levels act as a support because those are the levels where strong market buyers, big aggressive market buyers, were entering the trades. Those levels are holding the price because the big players do not want the price to go against them, because otherwise their trades would appear in the drawdown. So when the price reaches the previous bright green deltas, those levels become a likely support. We see how the price reverses, reacts to them, and goes up, and more green positive delta appearing. Was I see your question in the chat? Was it asking, can I show to recognize the reversal patterns? And yes, we're going to talk about it today later on. Let's continue to the second scenario. The opposite to what we just talked about, the negative delta with falling price. When you see the price falling, so the short appearing bearish candles appearing one by one, and inside of these bearish candles, you spot the bright red clusters, bright red negative delta. This might confirm the seller dominance and may point to a bearish continuation. So the falling price with bearish delta is going to signal you that you might look for entry points for the continuation downwards. As you can see in this example, the price has been consolidating for a while, and then the next candle started dropping down. In this bearish candle, you see the red bright negative deltas appearing on several levels, with a majority of sell levels, so the short negative delta appearing on the bottom of the candle. Notice how the price never came back above this level. Well, it potentially did later on, but this level has been holding the price. Although the next candle was trying to pull back, it still kept falling because this bright zone, red zone with highly negative deltas, kept holding the price and acting as a resistance. Why does that happen? Well, because the bright red negative deltas within the bearish candle are the levels where the strong, big negative sellers or short traders were coming in the market. And they are going to be likely holding these levels because they do not want their short positions to go in the negative. So these levels can act as a resistance and can also act as your entry point for the continuation in a short trend. Again, you can use it both if you're, for example, a scalper and looking to scalp this downwards move. You can also combine it with a volume profile, which I'm going to be showing in the next webinars, and use it as an intraday setup to find a specific entry point. But you can also use it to, for example, exit the trade. Let's say that you've been long for a while and your position is running heavily in positive, and you are wondering, well, when should I exit the trade? Okay, you want to maximize your potential of the trade. You do not want to cut your profit short. So you can wait for the signal on the delta footprint chart for the activity of sellers to be increasing. And this may be your sign to exit your long profitable trades before the drop continues. So you can use these setups both for entry points, but also for exits. Now we discussed the first two. Let's move on to the third one. Third situation, the positive delta, but the price is falling. Well, buyers are getting aggressive, essentially, but the market keeps falling against them. What can it be? Well, this could be trapped buyers or absorption, for example, by large sellers. Let's have a look at the example. We see that the price has been consolidating for a while and then started falling. In this drop, despite the price keeps dropping and we see short bearish candles appearing one by one, we have a zone with extremely big amount of asks. So we see the huge positive delta colored inside of one of the bearish candles. This may be a buyer's activity. So buyers trying to buy back the price, for example, from the previous lows, supposedly if this was the low before, but the sellers keep pushing down. This can also act as an absorption. Supposedly above this low, if there is a lot of sell limits placed, remember the ask is buy by market against the sell limit. So the buyers may try to push the price up and they get absorbed by the wall of sell limits that is placed above this candle. So you can still see asks highly positive in this candle, but the price keeps falling because the asks were just absorbed. The aggressive market buys were absorbed by the sell limit orders and the price still pushed down. This can also be used as an entry point because if the buyers were absorbed and the price kept falling, this was the wall of potential sell limit orders standing there. So you may assume that the price, if returning back to the same point, will still continue to react and reject the same level, which we see exactly happening. So we see the zone, buyers were absorbed, the price comes back there, rejects it, and continues down. So you may not only be entering short if you saw the short activity, the bid activity in the bearish candles, but you can also use the ask activity zones inside of the bearish candle if the price strongly pushed back lower below it. So if you're looking at the footprint, this is my personal view and this is how I use it. It doesn't only matter what is inside of this specific footprint candle, but it also matters where the price goes in the next candle. Because since the next candle also continued dropping, you clearly know this was a resistance, this was absorption of buyers, and you can clearly know that you may use this as an entry point for the short continuation. Let's move on. The opposite scenario from the third one, the negative delta, but price is rising. Well, you may assume by now and you know that this is potentially an absorption of sellers. So aggressive sellers stepped in, so logic is exactly the same, right? Price is pushing higher and sellers become more aggressively. This happened, for example, near the top. It can signal a trap for the sellers or a coming reversal, but can also signal the absorption of aggressive sellers. And in this example, this is specifically an absorption because why? We see the price pushing higher in the next candle after the candle with a negative bearish delta. So once again, the logic behind it is next. We see the price pushing up, we see the bullish green candle, inside of which there are several levels with a highly negative delta. We wait for the next candle. Next candle pushes up, and we definitely know that that was likelier an absorption. So the sellers were trying to aggressively sell by market, but they got absorbed by the new wall of buy limits that was created to support the upwards continuation. If the next candle after this closed bullish, we can use the same zone as the buy entry for the trend continuation upwards. We see this in this example that the price didn't come all the way back to the same activity, to the failed seller activity, but just a couple of ticks above it, we see the nice support being created. And in this moment, you can already decide to enter buy by market order, for example, or buy limit order at this support for the continuation of the upwards momentum. Now we discussed four. There are two more situations that I want to talk about, and then we're going to move on to the live chart, and I'm going to show you some live examples. The situation number 5, the stop loss hunting or profit taking. We see the price pushing upwards, and after the strong uptrend, you spot a candle with high volume and highly negative delta. But the candle closes below its open or forms a long upper wick. I specifically chose to show you the candle of the body of the candle and the wicks so you can clearly see where is the wick in this candle. So it closed below the highly negative delta, the red zone which is highlighted on the chart, and with a long wick upwards. Okay, this can mean that institutional players, big market players, are closing long positions, so selling into strengths, which creates pressure on the price. And it could be an early sign of the correction or even reversal. So remember that the take profit for buy orders is a sell order. So if the price reaches this level and they start actively selling into strengths, this is going to be the negative delta that was created there. Once again, I said it before, I'm going to say it again. What is really important is how this candle and the next candle closes. So do not rush. Wait until the price creates the next candle. Be patient, and then you will be able to see what was this cluster that was just created. Since the highly negative delta was created in a week, and the next candle closed below it, you can now assume that this is going to be the new resistance. Because if aggressive buyers closed their orders, they sold their orders aggressively, got out of the market, we see the highly negative delta created there. Potentially, maybe they even reversed for the sell by market order. This is going to be resistance, and you can use it as your next entry point. So more aggressively, more risky scenario would be to enter from the zone of the negative bright deltas that were created in a week. More conservative, you would be able to wait for the next clusters with, for example, the last cluster which you see in this specific screenshot contains bright deltas, bright red delta, also bright green delta with an absorption, as you already know, and you can use the next bright deltas as your entry points, which would be more conservative because at that point you would wait for the extra confirmation. So again, the rescare situation, sell from the initial negative delta in a week. The more conservative, wait for the next one to be created, wait for the extra confirmation in the footprint candle, the next bright deltas, and sell from the new recently created levels. And the number 6, stop loss hunting or profit taking in the opposite direction. Okay? That's a little bit of a different scenario, and I want to also you to have a look at it. Scenario is like this. Price creates a low and creates a nice support. I specifically highlighted it with a bold black line on the left side of the screenshot so you can clearly see it. Afterwards, after some time, the price breaks below the previous low and below the previous support, triggering stop losses from retail buyers. So if retail buyers place their stop losses there, the price is going to hit those, collect them, and this causes a spike in market selling and as a result in a candle with a strong negative delta. However, as you can see, the price quickly bounces back above the level, and even better, it creates a long wick to the downside, which shows us how quickly was this move. So this interpretation could be as following. It can be a false breakout below the previous low, a liquidity grab by the big players who are collecting stop orders to build their own long positions. Okay, so the fast recovery and the long wick to the downside shows that the selling was really quickly absorbed, and those are your potential entry points also to the upside. In this situation, I wait until the price bounces back above the previous support. Okay, so I see the support, I see the candle that goes below the support, breaks the support with a highly negative bright delta inside of the wick below the support, and I wait for the price bouncing back above support to confirm the upwards direction. And then I look for entries for a buy. Okay, it's gonna work in the opposite scenario like this. For example, if you have a resistance and you have the positive, like green delta instead of the red one, for example, you can also wait until the price goes below the resistance and continuation for a sell. So you can use this in the both directions. I only added that one example so we can quickly move on also to the live examples and we have some time to talk about those. Please let me know if this was clear. I do see the comments. So if this is clear, we are going to be moving on. And right now we talked about 6 different key footprints-based patterns, which we are going to be keeping an eye on during our live analysis as well. Okay. If you have any questions, if you have any feedback, this was very clear and helpful. Thank you so much, Fruls. Ravi, thank you so much for your kind feedback. I'm very happy to see that it was, it's actually helping. So now let's have a look at how to activate Delta colored footprint chart in your others platform, because this setting is going to allow you to track all the 6 setups that we just talked about today. But before we move on, just a quick heads up, the spring promotion special offer from Aras has already started, and it will last until April 18 only. So follow the link in the description, get the promo code for a discount and the promotional subscriptions, fix the pricing of the platform before it gets changed. So make sure that you go in the description, click the link, and use the last couple of days of our spring promotion. Okay, let's switch to the live example. There we go. So in front of you is a footprint chart on 5-minute timer for gold futures contract. And I'm going to go step by step to first through the settings first, so you know how to adjust your settings in the platform. if we are talking about the simple bid and ask kind of footprint, you can use it on the left side of your screen, select bid and ask, and you will see the simple bid and ask being reflected on each and every single footprint candle. Okay, on the left side of each footprint, you will be able to see the color of the candle, whether it's a bullish candle or the bearish candle. For me, my charts are, in this example, blue and black. Blue represents the bullish candle and black represents the bearish candle. Okay, so you will see which direction the candle goes on the left side of each footprint being created. So this is simple bid and ask. However, for the purpose of today's session, we are going to talk about the bid and ask delta colored. So once you have your footprint chart on clusters, which you can also enable on the upper side of your screen, clusters here, you go into the left side menu and you still click on the bid ask, but choose already the bid and ask delta colored. This will allow you to turn on the settings that we've used for 6 previous setups that we've talked about earlier. Now, what is really important is to be able to set the proportional gradient correctly. And what I'm talking about can be found in settings. Settings can be activated on the right upper corner right here by clicking on the settings icon, or you can click on the background and you will be able to find settings in the new popped window. You go to the cluster settings, and right here, first of all, you can choose the colors of your footprint chart, because I know that for some of people, the green and red kind of clusters are kind of aggressive. So you can select your own colors here, for example, blue and orange, or whatever you would prefer to use. I'm going to keep it for green and red for the simplicity of our today's lesson. And going down, you will be able to find the proportion settings. Now, there are different ways you can use it. For the purpose of our today's session, I'm going to change the visible region, and we are going to drag the upper cutoff to the left side to be able to see only bright, important deltas. And I'm going to keep it at the level 25, okay, for the upper cutoff. Now, this proportional gradient is really important to be set correctly, because this will allow you to separate all the noise in the market from what really is important happening. Because if you will be able to, if you will put your upper cutoff all the way to the right side, you can see that every single cluster, barely every single cluster, is actually highlighted quite aggressively and brighter, which doesn't allow you to filter out of how important the information is. So for my own preference is to put it all the way to the left, because in this case, I might only see and notice the cluster which are actually quite important. So those are the most important ones. In the next lesson, we are also going to be talking about imbalance settings, but for the purpose of today's session, I'm going to unenable it to not mistake you, okay, and to not make you lost in the information. So this setup, these tools help you to identify buyers and sellers dominance and moment also of imbalance between buyer and seller activity, and each and every single candle, giving you the view of who is pushing the price in each cluster. So again, no more theory. Let's dive into specific strategies. And strategy number 1 is going to be the reversal pattern and the shift of control from buyers to sellers, the one that you guys were asking about. So we are going to be looking for an example where the current push has been happening. Oops, 1 second. And gold has been consolidating for a while, so allow me to just go backwards slightly to show you the previous examples. And I might need to switch my settings as well here to accompany the previous volatility of the market. Okay, I'm gonna put my upper cutoff slightly higher So we can actually see more when it's happening in the charts. And then we are gonna have a look at it. So we are looking at the example where the push has become like the transfer of the power goes from one side to another. As we can see, the price has been falling for a while. We see several bright red clusters been formed here. With gold is a little bit less. I specifically chose this because it's going to help you to see the bright cluster without getting lost, because in Forex, for example, Forex futures pairs, you will be able to see more of the different colors and it can be misleading. So I really, appreciate gold for specifically being a little bit clearer. So we see the price dropping, bearish candles one after another, several red bright deltas appearing. And as you can see here, we start seeing a different activity. So, for example, the price has been falling, right? But a large green candle here, green footprint, appears at the bottom, and buyers start kind of pushing the price back to the upside. That's a sign of the large buyers entering the market and the large sellers potentially getting stuck. So you will be looking for the transfer of power from the aggressive sellers to aggressive buyers. And how does it happen is that we see the bright red clusters here. Let's put it even higher so you can see more of this as well. So it's even more clear for you. Here we go. We see mostly red footprints appearing, and then at the bottom, the price gets stuck. Now, what is really important is, first of all, we see that the price has been creating a support. So it couldn't break below the level 32.10 anymore. It tried, but it pushed back up. You see several candles with long wicks as well. This is the first candle with long wicks on both sides. And I'm going to make it even easier for you. So by enabling the view of the candle here. Right here. So we see the long wicks on both sides. Then we see a long wick on the bottom side, which actually gets rejected this buyer activity, as you can see. And then we see two more candles with a long wick to the downside. Now, the logic behind what I see here, and I want you to see, is the following. And this is how the setup is going to look like. On the footprint chart, usually it shows up as a color shift in delta from the red to green, or for the green to red if we are looking at the opposite example. So, for example, a series of aggressive red clusters in the previous candles here appearing, right? And all of the sudden, you can see a bright red clusters, bright green positive delta popping up. A strong signal that aggressive buyers are taking over and pushing the price higher. So the first candle, we see a mix. We see still aggressive sellers trying to push the price, but from the bottom, already the buyer activity starts accumulating. You already see the buyers getting stronger. The next candle, we see a pretty strong buyer activity and barely any sellers. Next candles, we see start rejecting the zone. So all of these candles didn't close below the activity of the aggressive buyers. And finally, the price starts pushing back up, right? So this transfer of power from sellers to buyers is what I want you to look at. It may look like a stock in the first candle of green and red clusters because it shifts the power, and essentially it shows you that the power of sellers is still continuous, but buyers are stepping in. And in the next cluster, you want to already see the dominance of the side that is taking over. In this case, it is the buyer side and the buyer pressure. Okay, so this is what you are looking for the reversal pattern. Let me know in the chat if you have any questions. I'm gonna be able to answer them a little later as well, but I want to find one more example to show you. And this is essentially the good example. You see the price has been consolidating, right? We had small consolidation here for a while. The price didn't move anywhere. We see the drop starts. And in this long bearish candle, this is only 5-minute time frame, but we all know gold moves quite fast. We see several red clusters. So I want you to look at this specifically footprint cluster. You see that it's mostly red, which shows the activity and the pressure of sellers appearing. We don't see any bright green clusters, barely any positive delta. About 70% of this specific footprint candle is actually red, with bright red deltas occasionally happening. Now, what you see next is the next candle is already mixed, okay? You see the stacked bullish delta, bearish and bullish. So the sellers are getting stuck while buyers are actually trying to become more active, start aggressively buying into the market. Next candle, you see even more buyers appearing, and the next candle, we see the complete shift. So this footprint and this are already 80% green compared to the previous 3 footprints, which are mostly red. Okay, so this is the shift of power that I want you to look at. And in this example, the best entry would be to wait until the price finishes this consolidation, because we see that the price has been stuck here in the consolidation. So you see the shift of power, and this is your confirmation to start entering the trade. Because you see the bullish candle. Oops, 1 second. Apologies for the quick interruption. Technical issue. It did not... It just partially closed my chart. Here we go. Okay, we are back. So we see that the price pushes up. We see one bullish candle, another bullish candle, and on the exit from this consolidation, we see a very aggressive buyers stepping in. Absorption of sellers. The price didn't go below the previous zone anymore. Aggressive buyers, this is your zone for entering the market. So you see that the price sticks to this zone, it didn't break it, it holds on, the wick gets created into this zone, and the price pushes higher. We see also the price pushes up, we see the buyer activity, and here sellers trying to step in. You see the sellers trying to step in, but the footprints are still mostly green. This is how you know it doesn't shift yet to the other side, because despite the price slowed down, you still see the price holding on above the absorption of sellers, which we talked about before. And we see the price using this as a support. Footprints are still mostly green after a while, and the price continues to the upside. So the difference between this, for example, is that the footprint started to be mixed, green and red, but ultimately it still came out green, and the price was holding on above the previous absorbed sellers activity. While in this case, as we can see, it was red, mixed, green footprints, green push to the upside. Let me know in the chat if that was clear. Let me know in the chat if that was clear. So this is how you want to track the change between sellers and buyers and the trend reversal. This is a really good way to track it, and you can see it happening. You will be able to see it happening a lot also on the for example, Forex pairs. Yes, clear, fantastic. Love it, amazing. So you will be able to see it happening on the Forex pair even clearer, because the market is more liquid and you will be able to see more bright clusters. But for the clearer example, without a lot of noise, I specifically chose gold. Now, we talked about the reversal strategy. Let's have a look at entry on the impulse continuation using the strong delta. And for this, we are going to find an example of the trend move, the impulse with a strong delta. Now gold has been ranging here. Let's have a look at a couple of impulses. Yep, that is good enough. That is good enough. So let's have a look at this example. The price has been consolidating for a while. Here is a perfect example of the low being broken. So let's have a look at this. We have the strong support being created. You see the price is mostly holding above the level 32.26.5. Okay, so several candles are holding above it right here. So we see, and there is one more candle with a long wick to the downside that goes below, and inside of this wick you have a bright red cluster being created. It was created already here, and the price kept bouncing back, and this one long wick to the upside with a very quick recovery, and the next green buyer activity is showing you that consolidation is most likely over and the trend is going to start. Now, I'm going to sell you a little secret of how I know when the trend is continuing, which is not the part of this specific webinar, but just a help for you. Every time the price is stuck in consolidation, I wait for this one fake out. Majority of the times, consolidation is over when the price fakes out, at least on one side, before it starts moving. Because then the stop losses get triggered, retail traders mostly out of the market, big market participants were able to accumulate their big positions inside of this consolidation, and then the price moves up, usually even quicker than any retail trader is able to jump in and participate in this move. So once again, you see the last seller activity or the stop loss has been hit, and then aggressive buyers, and aggressive buyers. What I'm looking at here is this specific zone. Can you see how different is this zone, how brighter is this zone compared to everything else? We can clearly see that, right? Let me know in the chat if you can see that. So we see the buyer zone right here. Active buyers are adding up to their positions. I'm going to change the color to green. So active buyers are adding to their positions, more active, aggressive buyers entering trades, and the price keep pushing up. Now, what is important, as I mentioned before, is how does the next candle close? Can it go here? Like, can it go lower, for example, return lower after this candle is formed and reverse? Of course it can. This is why we do not rush. We wait for the one more candle after the bright delta been happening, after the bright delta showed up, for one more candle to confirm the direction of the market. As you can see, the next candle closes upwards, and already in this candle, when it created, I can place my buy limit order in this zone. And now when I enter the trade, tested down. Yes, we can see it. Thank you for the feedback in the chat. I really appreciate the interaction. Thank you so much. It's much more fun to do the webinars when you see the interaction from both sides. So we see the bright green delta, the bright green zone, and already here I can start placing my limit order. Now, what I do when I place my buy limit or sell limit order is that I place it 3 ticks or 5 ticks higher than the zone. So my zone finishes here, okay? And I'm gonna place my buy limit, let's say 3 ticks higher, because sometimes the price doesn't reach it, and it reaches barely the border of the zone and then takes off. To make sure that you will definitely get in the trade, I would get a little bit higher. I would sacrifice this couple of extra ticks of profits, but I would make sure that I'm actually in the trade that I'm looking to get into. Okay, so what we see here is that the price goes higher, 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 then returns down and tests the zone with a long wick to the downside, and then continues up again. So this zone was holding this price because that was a zone of activity of buyers, and buyers didn't want the price to essentially go, the price to go against them and the trades go in the drawdown. So this is a trend continuation kind of setup. Again, works both if you are the scalper and if you are an intraday trader looking for the entry within your setup. This is an example of absorption that we talked about earlier. We see that the price dropping aggressively. So, and inside of the bearish candles, you see the bright green zone being created. Why the bright green zone? Well, because when the price is dropping, buyers are trying to buy back. Aggressive buy by markets happening, but right here can be already the zone of sell limit orders. So aggressive buy by markets get matched with the sell limit orders. They absorb the buyer activity and the price keeps pushing down. That's why we never enter on this candle. We always wait for the next one to see if it was absorption or essentially the price really does, reject and go back. So let's have a look at one more scenario, and then I'm going to leave a couple of minutes for your questions. If you have any questions, by the way, this is a moment to start already typing them, because then I will be able to answer them in the best possible way. This was a good example. Let me put my proportion settings a little bit lighter so we see this more on the bright side. Here we go. So we see the price dropping, and we see here it's not so bright, but it's quite a big zone of sellers. Okay, so this zone of sellers, aggressive sellers adding to their sell positions or entering their sell positions, we don't know, right? But sellers entering their positions, this zone in the future may act as a resistance. Because the price went down, sellers were adding up to their positions, and now the price returns. Now, what can we see? The price did go slightly higher than this zone initially, but essentially it did continue all the way to the downside again. So this zone ended up playing as a zone of resistance, and the price still rejected it here. They tried to push back, but it failed because the zone of sellers was quite high. So this is also the trend continuation kind of setup that we just talked about. Let's have a look at, this is a stop losses as well. Hunted, we see that it went below the previous weeks and bounced back. We talked about 6 different setups and 2 extra setups for trend continuation and trend reversal today. Let's have a look at the question that you may have so I can help you in the best possible way. Again, I don't know everything. It's not magic. It's just the market reading, but I do know some things, and I do hope it can help you as well. It's not a silly question. Silly question is the only one that is not asked. The chart settings, actually, you will be able to download this specific chart for GC, for gold on 5-minute time frame in the next 30 minutes after our webinar is finished. So after webinar is finished, you will go to the description of the video through your email and download this specific template, and you can just download it and apply it to your orders. Which ticker is the best usage for the strategy? Actually, every single ticker works because the principles of market auction and price formation are the same on any single price, on any single instrument. But I do find it working the best on CME, so S&P 500, mini S&P 500, Nasdaq, mini 100, Dow Jones, Russell. I find it working well, but you need to be more selective on the forex futures, and I find it working very well on gold and silver. Now, for example, for oil, I prefer to trade a footprint with volume-based footprint, and not the bid and ask delta covered. But all the CME type of products, I find it working really well for me. This is not my full strategy, Alexandra. This is a part of my decision making for entries and exits. So my full strategy is based on the volume profile and different volume visualization tools. Some of them we're going to talk about in the next webinar. So the base you will be able to build. So on the next webinar, we're going to start covering the combination of volume with footprint. On the first webinar, we're going to be covering the volume profile with volume, with instrument and footprint. So this is going to be already looking like my strategy. For the footprint charts, I find them working the best for 5 minutes, 3 minutes, or range XV charts. Do you have a preferred time frame in relation to the footprint? Yes. So again, 5 minutes, 3 minutes, my personal preferences, and range XV chart. Which one, Balacio, from all the ones that we talked about before? What is the best part of swapping from trading crypto to indices? To be honest with you, it's going to be a different answer that perhaps they're not the answer that you are expecting, because I don't think you need to swap if you're making profits. Because for me personally, I understand better indices, for example, futures and for forex futures, oil, gold, silver. Crypto is just not my type of asset. I think every single trader needs to find something that suits them best. And if crypto suits you best, I don't see a reason why do you need to switch. I think you need to switch if something is not working. This is when you need to switch and look for more and look for something that suits your personality, your trading style, perhaps your trading hours best. However, if it is working for you, I think you need to stick with the things that are working. And another thing is that I find it to be it's better to be good in several small amount of assets, for example, 1, 2, 3 assets, than to try to trade everything that you see moving. Because if you trade same asset every single time, every single day, you will be able to learn their behaviors, you will be able to learn their specifications, and you will be able to learn better to recognize the specific patterns for this specific asset that you trade. Okay? No, the number of limit orders you do not see in the footprint. Footprint shows you the executed orders that already happened, both on the limit side and the market side. And this was in the beginning of the webinar, so you will be able to rewatch in the recording. Now you are able to see the amount of limit orders that are still pending using the depth of market. And the depth of market tool we covered in our first webinar. And if you were registered, you are able to access the recording of the first webinar through your email. Many times the market is in the range. That's true. And I love the range because during the series of webinars, I'm going to be showing you the method of trading after the range, which is using the volume profile. However, if you find better to use the non-time based candles, like for example, the range XV candles or the delta candles, you can use that. Right? But you are right that market ranges approximately 70% of all the time. So you definitely do need to know what you do in the range. Do you have a strategy for the range, or do you just stay away from the market and being able to be disciplined enough to follow your rules? Yes, you can use this setups for swing. Now, I do trade swing already as well. Now, this says more for the specific entry and for exit. So I use a volume-based trading strategy to determine my entry zones, and then I use footprint to find the specific entry and exit when the price comes to my major zones. Ravi, I'm going to be talking about it in the next 2 webinars, so you will be able to also have a look at it. But you can definitely use it if you want to find the more precise entries and more precise exits, because of course, when we trade swing, usually our stop losses are wider, our take profits as well, but using footprint can cut your stop losses smaller, which will give you the better risk to reward after all. Let me have a look. Thank you so much, Ravi. I really appreciate that. Where would your stop loss be? Now, the stop loss, Nicholas, I prefer to use based on the volume profile. So this is something that we're also going to be covering in the next 2 webinars. So I really I'm really inviting you to join the next ones, which I'm also going to be able to answer more questions because we're going to see the full picture more. Do I use a smart DOM? I use a smart DOM much less. It is rarely when I use a smart DOM. I prefer my footprint charts. But the explanation about the smart DOM was in the previous webinar, which you can also access only, but I prefer the footprint charts for my personal taste. Thank you so much. Thank you, everyone. I appreciate every single one of you joining today's webinar. Now, let's quickly sum up what we did today in our class. We covered our mechanics of bid and ask, and saw how Delta helps us to understand who is dominating the market, aggressive buyers or sellers. We also learned how to visualize this using a footprint chart and bid and ask Delta colored mode in others. Then we moved into our 6 base setups and 2 more setups, which are used by many traders and by myself as well in every single day trading life. And I hope those 8 different strategies can also help you to better your trading, your exits, and entries. Those are designed both for scalpers and intraday traders, but you can also use it as a swing trader to find precise levels. And now you know how to spot burst surges of aggression inside the candle and how to determine the presence of the big market players, okay? And most importantly, how to use all these insights to make smarter, better trading decisions. If this session was helpful for you, please drop a few words in the chat and just send us a quick note after the webinar. Even a one line is great because this is going to help us to understand what did you find especially useful, what would you love to see more in the upcoming webinars, and your input really does help me to fine-tune my next sessions to match your needs and trading style. And speaking of the next time, we are continuing the marathon in just 1 week from now. So the webinar number 3 is going to be about the vertical volume indicator, imbalances like I promised today, and their connection to cluster analysis. We'll cover what imbalance means in the context on the footprint chart, how vertical volume works, how it is displayed in ADAS, and most importantly, how to use it to find powerful entry points, especially when you combine it with footprint and imbalance data. I'll also show you how volume and delta spikes can reveal the key levels in the market and major players' reaction before the rest of the market sees them. And one more thing before we wrap up, our spring promotion already has started. So as I said before, go in the description of this video, make sure that you follow the promotion. Is going to last until April 18th. There are a limited amount of licenses available, so make sure to not miss out. It's one of the biggest promotions throughout the year, and make sure to grab it before the price increases. Thank you so much for your feedback. In the chat, the last 2 weeks had been really informative. Team said, thank you so much. Really appreciate your feedback. Appreciate every single one of you. Thank you. And I am taking the couple of also comments from the chat into the next webinars, and we're going to cover them later. So thank you so much, all of you, for your participation, your energy, your great questions, your amazing interaction today. I'll see you in just 1 week from now. And as always, use what we've learned today in your real trading and come back next week and give me the feedback on your results. So I'll see you soon back.